All right, what is going on, Discord and YouTube family? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is Sunday, July the 6th, 2025, year of our Lord. And we are back reviewing or breaking down the S&P 500, the NASDAQ, and the Dow Mini Futures. So if you took a look at the video from last week, it was pretty spot on. I called for the market to be going higher, closing the end of the month very, very bullish, pulling into the 4th of July weekend, very, very bullish. That's exactly what we got. Continued bullish activity. This week, I'm going to be breaking down my analysis one by one, just basically going off the structure. Again, I don't really care about the sentiment, but there are a couple things we need to discuss in relationship to potential catalysts moving into this week. This will be a full week of trading, but a very low impact news week. But there is one thing that we need to discuss that I'll discuss when we get to the news section. So without further ado, let's jump right into the S&P 500. The S&P 500, looking at the monthly chart, we won't look at the 3-month until about another month from now. I mean, I'll always keep an eye on it, but there's not really much to see when there's like 2 months left in it, right? So, but looking at the monthly time frame, you can see that we broke all-time highs very, very clearly, right? We not only did we break all-time highs, but then we decided to push a little bit higher, and now we got this little high right here that the market could use as support. There's a couple levels the market could use as support, however, which is this high here, these highs here, and then this previous high from the previous month, which also lines up with 50% of the current month's price action. If we take a Fibonacci retracement going over the previous month, turn this little magnet on here, we can see that if we pull all the way back, we could afford a pullback all the way back into 60.66, 59.87, 61.13, and all of these will still be acceptable as a higher low on the higher time frame for the market to continue higher. If we look at the monthly candles, we can see, just looking at the candles and analyzing the candles for what they are, none of these candles have done anything but go even more and more bullish. We put in higher highs, we put in higher lows, we got full body candles, no wicks at the highs, no wicks at the lows, nothing but buyers, no strong sellers anywhere in sight. That being said, Trump just passed his new bill, so that also is going to incentivize big money to continue buying. Do your own research on exactly what's in that bill, but from what I'm reading, it is very, very bullish for the upper middle class and the rich, right? The people that are investing into the stock market heavily, right? So we break down the weekly time frame into the stock market or into the S&P 500. We see again we had this aggressive sell-off back in April. The market has rallied probably about 30% since then, and we're just continuing to rock and roll. I do believe, however, that this week could be somewhat of a pullback as there's not a lot of news, right? And there's other catalysts that the market may want a better price for moving into the next couple weeks. So it wouldn't surprise me at all as for like the next couple weeks, we start dragging down nice and slow until we get to these highs at 6107. And then, like I said before, we could go as low as 59.87, 59.63. Basically holding this structural low right here. What I'm looking for to continue to be bullish on this market, right, is I want to see the market continue to hold above this level here. This level is from on the weekly time frame. This is the week of June 9th to roughly about June 23rd. This little 2-week period, we built a ton of consolidation. I remember sitting in this consolidation since like May, right? And we were in this consolidation for so long, and I was like, okay, if I want to be a bull, right, or a bear, I don't want to be a bear until we get below this level, right? And then look to retest, and then I'll be targeting for scouts back into this gap fill at 57.41, right? The further we get away from this gap fill, the more less likely it will fill without some type of major black swan event, right? Like, so the further we get away from this, the less chance that it will fill. So as long as we stay above this current structure, I'm looking to be a bull until the market tells me it's not time to be a bull. Like from up here, looking to be bearish going back into this structure. And we'll see how that plays out as we get to the lower time frames. Moving on to the daily time frame on the S&P 500. Again, we got this aggressive push up from the market. Now, I have a thesis, right, that I'll share with you guys real quick, but this era is known as, this era in history will go down as the AI bubble, because make no mistake about it, we're in a bubble, right? We're in an area or a time of euphoria in which the estimates for stocks, right, are well overpriced, right? Like the value for these stocks are priced based on their ability to produce AI profits. But the problem is that none of them have made any profits. So it's all speculation. Now, what I'm going to say may sound a little weird, but again, you can do your own research and see if I'm correct, right? So what you would want to do is you want to go back to the last time we had a bubble, and that would take you about back to March 2000. That's when the bubble popped, right? The bubble started at about December of 97, this little low right here, August of 98, December of 97, right? What you'll see if you take a price range tool back to that area, right? I'm just going to do this real quick. I'm not going to do it for every instrument, just the S&P 500, right? You can do it for any instrument you want. What you'll notice is from that very, very low of December of 97, right? I'm just using this entire trend. It's an 83% rise, okay? 83% rise before we got a 50% drop, right? Or I think it was a 75% drop. So if you just look at where we are right now, right? This was the major dip, right? So I'm not going to count that. I'm just going to go back about 2 years, say October of 2023, right? We just take our price range tool and we go to either October of 2022 or October of 23, your choice, right? So that's 50%, right? And then from 2022, you go up and we're right at about 81%, right? So depending on which low you want to go from, we either have about 30% to go, or we're right at the level where the bad news came in, the evaluations were horrible, the markets were like, hey, we're not really worth this much, and then the bubble burst, right? So I'm not calling tops. That's not what I'm trying to say. I'm just trying to make you aware of history always repeats itself. And historically, where we are from a percentage gain point is exactly where the AI bubble or the .com bubble started to pop, so to speak. Right around the corner, we have bank earnings, we have tech stock earnings. So just be aware if you're buying at these levels, right? I'm not saying that you're buying the top, because maybe this could be the bottom. Just going to say if you're purchasing stocks at this level, you may want to think about hedging, in my opinion. So I just wanted to throw that out there while we were looking at the weekly time frame. All right, let's continue. Looking at the daily time frame, you can see that on the Thursday and Friday, we got 2 half days. And what they did on TradingView, for every reason, they put that as a Monday. I don't agree with that. I don't know why they did that, but that's how it is, right? We're already in the week of Monday. So what we got on Monday, though, is we got our first red candle of the sequence. This red candle still hasn't done much, but I'm thinking that it will, right? The one thing that it didn't do, we did not make a new high, right? Now, this was shortened activity, but there was NFP in this, right? There was 2 half days, which is technically a whole day, and the market wasn't able to make a new high finally, right? So we'll see if this is consolidation, or we can get a nice break below. So what I'm looking for, to be a bear to start with, I need to see us get below July 1st low, which is 62.27. But from this level, we can afford a pullback to the upside inside of this daily candle, and then start to merge back down to the downside. I'll break down those levels as we open up our 4-hour time frame, so you can see exactly where I'm looking to trade going into next week. All right. So our weekly projections to the bullish side, we're looking at about 3.24%, 3.23%, depending on where you're pulling it from. The levels that they're going to be of importance is that weekly level. I have it drawn out here on the daily, but the weekly level also entails the monthly settlement price, which is usually a good price to pull back into. It's a really nice settlement price. So from the daily demand, what we're looking for is about 3.24%. We're looking at about 62, 61, or 64, 64, 75 from 62, 61, 50, right? So essentially the market pulls back down here, holds somewhere inside of this gap, and then rallies back up, 3.24%. And that's not a bad bet. I mean, that's what the market's been doing this entire time. Again, my thesis is just a thesis, right? So play the market how it is until further notice. We have our weekly fib here. As long as we stay above this, we could just bounce and go straight up. So what I'm anticipating, if we gap up and bounce off the daily fib, we get through this resistance zone. I'm looking for about 3.23% to the upside to about 65.03. So this week could be some huge gains for the futures market or a nice healthy pullback. In the event that there is a pullback, then I'm looking for the weekly fib to be kind of like my line in the sand. We get below this weekly fib, we start retesting it and rejecting it. Then I'm looking for about 3.23% again to the downside to about 60,000 or 6,075, which makes sense because we could afford this pullback. Like I said before, on the higher time frames, we break through all this liquidity. It will be a very choppy move. These green boxes, the daily demand zones, are going to be there once the market bleeds through them. You're going to get really good opportunities to long the market back up. Just don't long it or hold it too far. If the market does turn bearish, then we come back down here and retest this level, fail again, and then go lower into this weekly fib that has not been mitigated, and then eventually heading back to the monthly fib or 50% of the previous months. From the monthly settlement, if we gap down, then I'm looking for a push down to about 6,050.25. Eventually, this market's gonna pull back, right? We have a nice rally here, but what we haven't had is a healthy pullback. So I'm anticipating the market cleaning up all this activity, eventually headed back down to this daily demand zone between 60.40 and about 59.68, just like we talked about on the weekly and the monthly time frame. So those are my thoughts on the S&P 500. Let's move over to the NASDAQ and Dow Jones, and we'll break it down roughly the same. Moving over to the NASDAQ time frame, again, I'm not going to break down my thesis. If you want to hear my thesis on the AI bubble, just look on my analysis of the S&P 500. But on the NASDAQ, you can see that, again, I said this a long time ago, way back here. I said, we're going to go up. The NASDAQ is going to lead this charge. Why? Because the Mag 7, i.e. the tech sector, is the reason why we're up here. It's an AI bubble, right? So the NASDAQ doesn't have finances. It has very minimal things in it other than the tech stocks. So if tech is doing well, the NASDAQ is going to lead this charge, and that's exactly what it's been doing. We've been holding closing and opening prices right at the same level, closing here, opening here, and then going higher. Very clean higher lows. Again, this month doesn't seem like it's going to be any different, but I have to talk about both sides because that's just how my brain works. If you're a perma bull, or if you see this market as completely bullish, I completely understand it, but I like to discuss both sides of the coin, right? If we're looking at the weekly time frame, again, there is no levels above us. We're at all-time highs, but again, you can use data to create levels based off the percentage, the average percentage gain, but that's a whole nother video. But again, if you draw this horizontal ray here, right at this level, right at these highs, the market can afford pullbacks into these highs, right? And even all the way back to this high. And if we get really, really, really saucy, 20,337 will be in our sights at some point, right? This gap is going to get filled. I'm going to say it every single video. The market will find a way to fill this gap. I don't know how, I don't know when, but the market's going to find a way to fill this gap at some point, right? And this will be a great opportunity to buy the market when we come down and fill this gap. Right now, we're roughly about 2,600 points away from that gap. So filling this gap is probably going to be a 2-3 week endeavor. So we'll see exactly how they get down here, but they're going to come down and fill this gap. All right. So to the downside or to the upside, we'll talk about those levels when I break down the 4-hour. But to the downside, again, I'm looking for pullbacks into 22,314, maybe even the top of this wick at 22,240, pullbacks into 21,471. And like I said, ultimately pullbacks into 20,337. That's kind of exactly how I'm looking at the weekly time frame, mostly bullish. But if the bearish opportunity presents itself, I won't hesitate to jump in those trades as well. So looking at the daily time frame, again, the first red candle on the daily, the second one on the NASDAQ, the first one on the S&P, the first red candle was here, didn't accomplish anything. The second red candle is here, so far hasn't accomplished anything. You want to see the market start breaking through these equal lows, at the very least 22,591, in order to even consider the market being bearish. I think that there's an opportunity for a pullback this week just because of where the VIX is, and I'll break down exactly what my thoughts are once I break down these levels on the other two instruments. So let's drop down to the 4-hour, break out our top down analysis on the NASDAQ, and we can kind of get a clear picture of where I'm looking to trade, right? So you see we have our chessboard, we have this 4-hour resistance zone, and then we have our levels of interest headed into this week. So to the upside, we're looking at 3.92%, plus or minus, up or down, just depending on how we get delivered this week. But to the downside, we have a 4-hour demand zone at 22,71425, right? Which is this 4-hour demand zone here. This is where I would like to see the market pull back into to start the week, meaning we gap down, we get below the weekly fib, we tap into this 4-hour demand zone and even go as low as this 4-hour support. But I have it stopping here at the very least, and then we rally up 3.92% up to 23,600.25 for the week. Secondarily, if we drop down and we can't get below weekly fib, we hold weekly fib, we hold this structure here, and maybe even tap into this previous NWOG at 22,748, but I got it from the weekly fib, pushing up about 3.9% into 23,729.75, right? So we drag down, hold the weekly fib, and then we pop back up, right? Those are my thoughts on the bullish side. Let's talk about the bearish side. So if we're going to be a bear, I want to see the market trade up to come down. The levels that I'm looking at to the upside is this imbalance right here, right? There's an inefficiency between the July 3rd 4-hour candle, the July 4th 4-hour candle, and then the July 4th at 6 a.m. candle. So the 2 a.m. candle and the 6 a.m. candle. What that also creates is a resistance zone in addition to a fair value gap. I like to see the market bounce off monthly settlement. It can even gap down first and then push back up. But I like to see the market push up here, retest this resistance zone, close this inefficiency, and then start to trade down, meaning the market will trade up to come down inside of that daily candle. And then we could have targets to the downside. I'd be targeting weekly fib, NWOG 22,750, 4-hour demand at 711, 4-hour support at 384.50, weekly fib at 22,198, and then finally weekly projection at 3.87% from the 4-hour resistance at 22,095. If we gap down, right, and we don't go up, let me move that back. We gap down and we don't go up, then I'm looking for this weekly fib to hold as resistance, just like I was looking at on the S&P 500. We get below it, we come back up and try to retest it. We fail. We're looking for a push all the way back down below this 4-hour fair value gap, tapping into daily demand at 21,946 for about a 3.9% move for our weekly projection. Those are my thoughts on the NASDAQ. Let's move over to the Dow Jones. All right, moving right along to the Dow Jones. Again, the monthly candle looks strong. Don't need to continue to repeat that. One thing I would note is that the Dow Jones monthly candle never even saw any of the previous month's price action. It opened exactly where it closed, and then we continue higher, right? And the Dow still has the all-time highs to conquer. So again, just like I said last week, I think the Dow creates a much better opportunity for me in the way that I trade, because it hadn't reached the all-time highs. I traded it, we did pretty well on it, and yeah, it's going to be at all-time highs. And once it breaks these all-time highs, it's going to have basically the same thesis as the NASDAQ and the S&P 500. I just don't think that we'll come all the way up here and not take the high, right? So maybe we gap up first, right? Just like I'm expecting on the S&P 500. Now, again, the same levels exist on the Dow Jones. We got this little structure right here that I think the market will want to target, at least come back and retest. If it doesn't come back and retest this, then it's just going to continue to do that thing where it just supports the highs. Once it gets above the high, it uses the highest support, right? In this particular case on the Dow Jones, we're looking at these highs right at March 3rd, right? That the market could then hold. We have this huge gap in price action here that I think the market would be interested in closing all the way back down to 43,146 through 42,069. You just never know in this market, because the market has just been so bullish, and it's been very hard to find sellers in this market. So even though in a regular market this would be a healthy pullback, I just don't know if this market can get it done, right? And that's just me being completely honest. At some point, the market will close this gap again, and we talk about every single video. Well, actually, on the Dow Jones, it's already closed the gap, right? But the S&P 500 and the Nasdaq, we will see that pullback at some point, right? So moving down to the daily time frame, again, we can completely see that we have all of these highs above us, right? Let me go down to this rectangle. We have all these highs above us right here that the market is basically just waiting to take them over, consolidating at these highs, pulling back at these highs. But every time the same result. We come back down, we find more buyers, we go higher. We come back down, we find more buyers, we go higher. We come back down, we consolidate to build the pressure, sweep the lows, trapping sellers, and then expand to go higher, right? It's basically run rinse and repeat at this point. At this point, if you're a bear and you haven't figured out that holding overnight is just not the thing to do, then I'm praying for you. Up here, we'll see what happens, right? We'll see what happens, right? But for me, it's higher until further notice. That's just how I'm looking at it. And that does mean that we could get pullbacks, but it's higher until further notice. The unique part about the Dow Jones that I wanted to identify is this little daily demand zone right here. So if we do pull back, this is a great area to look for buys in the market. It was previous resistance. Now it's turned previous support, and it hasn't been retested. So the market will definitely be looking to come back to 43,529 through 43,174 at some point. Not saying that it has to do it this week. I'm just saying that these are levels that I'm looking at. All right. We go down to the 4-hour time frame. We bring in our top-down analysis levels, and we take a look at what the market has to offer, right? So on the Dow Jones, we've created plenty of structure for the market to come back to. We can see that the 4-hour time frame has started a drop, a base, and a drop pattern. So maybe we get that gap down, but we shall see. In order to be a bear, though, I would like to see the market come up first. And again, very, very similar to the NASDAQ and the ES, we have this inefficiency in this 4-hour resistance zone inside of 44,956 that I'd like to see the market tap back into, and then come down and either bleed through these levels or use them as temporary bounce spots to push down to our bearish projections of 3.14% coming from the 4-hour resistance. We're looking at about 43,545, which lines up with that daily demand zone that I was just talking about. We can't get the push into the 4-hour resistance, then I'm looking for the push from the chessboard high at 44,878. We're looking for about 3.15% to the downside, targeting again the top of this demand zone at 43,467. Right to the upside, right? We're looking at the 4-hour demand zone being our bounce spot, right? So we have a 1-hour fair value gap, and then we have a 4-hour demand zone. So we're looking at both. Not to mention the 1-hour fair value gap also sits above the weekly fib slightly, right? So from the 4-hour demand zone at 44,454, 3.18% puts our weekly projection at 45,867, well over all-time highs and kind of in blue sky territory. From the 1-hour fair value gap and or the weekly fib, 44,655, we're looking at 3.17%, targeting 46,073, again, blue sky territory. Again, those are my levels for the Dow Jones. The video is separated into chapters, so if you guys want to just kind of skip to your instrument, that's all fine and dandy. Let's move over to the VIX to kind of give you reasons to support my thesis. All right, moving over to the volatility index. One of the reasons why I'm very interested in a potential pullback is because of what I said about 3 videos ago, right? I specifically said, hey, watch out for the VIX gapping up, right, to sell the market off, and then dropping down to fill this gap so the market can go to all-time highs, right? And then once we got down here, the market had a decision to make whether it was going to go to the lows of the VIX, continue filling this daily fair value gap, or if it was going to go right back up to the upside. Now, things that could cause this is the volatility index, right? So it needs fear to operate. Like that's basically what it does. And what I'm starting to see is a reversal pattern starting on the volatility index. So if you look down on the 1 hour, we got the market tapping into an area of interest, aggressively finding buyers immediately, taking over the highs above 1880 and switching this trend to bullish. Now, to finish this, what I usually see is the market comes back down and targets these equal lows at 1880, sweeping through this low, right? Giving us one more push above by, let's say, Tuesday, right? And then by Wednesday, the buyers come back in on the VIX. They put a higher low in back at the same spot. And then we go and target these 19s. This is when Wednesday, I'm going to keep that in mind. By Wednesday, I'm anticipating us potentially getting back above the 19s and targeting the weekly fib at the 20s. Now, in order to do so, we would need some sort of catalyst, which before I go to the news, I want to talk about said catalyst. Over here, there is a 90-day tariff extension that came out 3 months ago, right? Around April or, March timeframe. Like, the market was so afraid of tariffs, and then Trump came out and said, hey, I'll give you a 90-day extension on tariffs. Well, that 90-day extension expires on July 9th, right? July 9th, Wednesday, July 9th, right? That extension expires Wednesday, July 9th. Let me type in expiry date so you guys can see that I'm not capping, right? Expiration date. And let that load. July 9th. There it is right there. So that expiration is going to expire July 9th. Now, if you've been paying attention to the news on the 4th of July, Trump sent out some letters. He didn't really say what was in the letters, but there were some letters sent out, right? We're probably not going to know until Monday or Tuesday exactly what those letters say. I don't really care. What I look for is structure to line up with negative catalysts. And right now, the market will be uncertain until July 9th, right? To add insult to injury, there's not a lot of news this week or other positive catalysts that can counteract this potential negative catalyst. The VIX has started a reversal pattern. The market is at all-time highs. This is a good time to look for the market to potentially pull back. These are things that support my thesis. My thesis can still be invalidated. So let's move on to the news for the week. Moving into July 7th, we have nothing on the calendar. Absolutely nothing on the calendar for the USD. We're not even on the calendar. So it's going to be a no news Monday type of day. And again, just leading to my thesis that a pullback is on its way. Going into Tuesday, July the 8th, USD, we have consumer credit at 3 p.m. There's literally nothing worth mentioning for the USD on the market that day either, right? We go into Wednesday. We have wholesale inventories, crude oil inventories, and the bond auction, which is worth mentioning. But at the same time, we have FOMC meeting minutes on Wednesday, right? You add that in with the fact that the meeting minutes are coming out, the bond auction is at 1, and the tariff extension expires, and Wednesdays are usually trend days. I'm just going to throw it out there as a thesis of mine. I am on high alert this week for a potential pullback, a healthy pullback. All right. So Thursday, USD unemployment claims, you guys already know this thing's been kicking butt. So if it comes in unexpected, it's only going to make the market sell off more. I'm just saying. But then we got the 30-year bond auction. Again, if people don't show up for this auction, it's not going to be a good thing for the markets. Okay. July 11th, again, nothing burger, right? Like I said, this week is very, very quiet. And my last thing that I wanted to say about this week, right, before I go any further, right, there's one more thing that I wanted to discuss. So let me pull this up real quick on a separate screen so you guys can see. So I like to give you all of the information that I have so that you can make the best decisions on the market moving forward this week. The last thing that I wanted to talk about was these guys. So this is my tab that I watch the banks on, right? So we have Goldman Sachs, Bank of America, JP Morgan, Wells Fargo, Morgan Stanley, Citigroup, Visa, and American Express. This is basically our entire financial sector in chart form. And one thing you should notice is that they're all basically at all-time highs, right? Like they're all like just shooting up to the moon. Why? Because they're expecting some type of interest rate cut, right? In addition, in about 2 weeks, right, what you'll find is every single one of these instruments have earnings to report. Banks never lose, right? So they're obviously going to beat earnings, but that's not the worry. The worry should be whatever they're going to say about tariffs. Not saying that it's going to be bad, not saying it's going to be good. I'm just telling you to be aware that if it's going to be good, the market's probably going to sell off in preparation for this good news so that they can get a better price. So when are they going to sell off? They're not going to sell it off the day before. They're going to start unloading positions now. So just a little food for thought. And these are all reasons to support my thesis of a potential pullback. I could be wrong. Hey, I could be right. But ultimately, you just want to be on the right side of price. That being said, these are my thoughts on the top-down analysis. I hope this is helpful for you. If it is, please don't forget to hit the like button, aka tip the barber. That being said, my name is T Hobbs. This is the Trader Shop. And I'll catch you guys on the next one, man. Peace.